Welcome traders to the next video inside our Alpha Traders community. On this video, we're going to talk about the most important part when it comes to Forex. We inside Forex believe that it is 100% needed for you to master all your technical analysis skills in order to succeed in the Forex market. But it's not limited to it, okay? There are psychological part, risk reward, risk management, and market psychology. So stick to it as we're gonna try to help you as much as we can. So why does technical analysis work? Because it's simply the study of past price performance. Okay? We also believe that the market is psychological based, and if many traders around the world are spotting the same patterns that we are, then we are all acting together and then making the market move. Okay, that's our belief on how the market works, and you will see that it can work for you as well. I'll continue showing you how does technical analysis work. That's why we use the chart 100% of the times. We apply technical analysis using our tools to get our confluences for bearish and bullish, and then acting upon those. Alright, so let's go to my computer and then I'll continue showing you. So here we are inside our computer and we are on GBP USD, which is the pair we've been using for this free series. And I would like to first tell you that we do not use volumes and not a lot of the indicators. So if you have a lot of indicators, just right click on it. For example, the volumes, if you have them, just left click and then right click and remove. So for now, you should have your chart clean, like with nothing besides candles. Alright? And once you do that, I already explained that technical analysis work pretty much because it's simply the study of past price performance. Okay, so candles are the representation of price performance. What do I mean? In each time frame, it represents the amount in pips each price or each pair has moved in that period of time. For example, we're now on a 4-hour time frame, and if we look at this bearish candle over here, okay, I would also like to say before I continue that if you do not understand clearly candle formation, how the wicks forms, and how the candle opens and closes, you should refer to our free ebook as well. That it contains out more detailed information about candles. Because again, this is an introduction video, and I don't want to take hours and hours to explain you, right? Which by anyways is available inside our Delta community, because there are 9+ hours of content in there. And yeah, so refer to the ebook, and this is how you should have your chart, clean and simple. And I would like to first introduce you to one of the most used tools in any technical analysis of any market whatsoever, and it is Trendlines, okay? And it's also important for you to note, if you will, write it down, that the market is trending, okay? Meaning it's going upwards or downwards only 30% of the time, alright? And the other 70%, it is consolidating, going up and down, up and down, up and down, up and down within a range, okay? It's not going up or it's not going downwards a lot. It simply remains within a range, like here, for example, and here. Those are consolidations, okay? Now, let me erase all of this. Alright. trend lines, as mentioned, you should know what wicks are. Trend lines, when placing your trend lines, you should use 1 to 2 touches. I mean 2 and more touches. But the important part is for you to focus on the first and the second touch, and then extend the trend line to the right side, right? So trend lines act as diagonal support and resistances. You know what support and resistances are, so don't worry about it. And it will act as diagonal support and resistance. As you can see, this was 1 touch as resistance, 2 touch as resistance, and 3 touch as resistance, and then it falls because this is a bearish trend line, right? We can also apply trend line on a bullish scenario. Let me find a perfect example. Again, we place a trend line to wick, from tip of the wick to the tip of the other wick, from point 1 to point 2, and then we extend to the right side, right? 1 and then 2. And every trend line, as the name, it's for a trend. And we have a trend, when we have a trend reversal, the trend line, it will be broken, okay? Like here, it has a breakout. And then we retest. Every breakout will have a retest. When the market breaks something, as I'm talking about tools, okay, support and resistance, trend line, moving average, and so on. Most of the times it will retest. The market's always retesting everything to make sure that's the decision, right? So it will act again as a resistance in this case, because it was acting as a support, right? And we'll learn more support and resistance are more detailed, but support is more like type of a floor, and resistance are type like ceiling, you know, for the price performance. And we should continue downwards, all right? And then trend line will act as a resistance in this case. And then again, we have a breakout. In this case, some of the case we will not retest because this was a very aggressive bullish run. You can see 1, 2, very few candles, and we moved a lot compared to this much of candles to move about pretty much half of the same amount of pips, all right? So again, we trace a trend line from tip of the wick from point 1 to point 2, and any tools, okay, not only trend line, but this applies to trend line. If you use it on a weekly time frame, it will be for the overall picture. If you use it on a daily time frame, it will be also for the overall picture. So weekly and daily time frame, again, weekly and daily time frame, overall picture, and all other smaller time frames such as 4 hour, 2 hours are for smaller pictures of the market, okay? So the bigger picture, the daily time frame and the weekly time frame will always rule because it's the bigger time frame, so it's the bigger amount of data per candle. Again, each candle represents the price performance in that time frame, and the longer the time frame, the more precise are the data, because in one daily time frame you have 24 1-hour candles, because one day has 24 hours. All right, so one more recap. A trend line, you should focus on point 1 to point 2, either on a bullish run, meaning to the upside, or a bearish run, meaning to the downside. You should trace it from tip of the wick, point 1, and tip of the wick, point 2, all right, to infinity. It's simple as that. When you learn support and resistance, you will be able to add out confluences, and then everything will make completely sense, okay? And aside with all other tools, it's also important to know that no tools inside our technical analysis strategy should be used alone. For example, you should not take in consideration only the resistance or the support being played out by the trend line as a confluence to enter your trade. You should use every tool as a matter of points, and put it on the table later to see how many confluences you have for each indication, such as bullish and bearish, and decide. For example, if you use trend line, support and resistance, and moving average, you can have a total of 3 indications for confluence, and 2 of them can indicate a bearish momentum, and 1 of them can indicate a bullish momentum. So I would recommend acting in favor of the one that has more points, if you will. As explained, you should think it as points. Every tool will give you a point for such direction, and then at the end of your analysis, you see how many confluences you have for bearish momentum, and then how many confluences you have for bullish momentum, and you take your decision. Again, do not use a tool by itself to enter the trade. Alright? So I'll see you in the next video.